It's Tom Homes for Sale bringing you our halftime report live from Vidona Residential Stadium. Vidona Residential, we help good people to win at real estate. Let's talk about the first half of the year and what a first half it's been. The crowd has been feeling all the ups and downs like they're on a roller coaster. Compared to last year, we are seeing almost the same amount of buyers and they are competing for only 60 to 65% of the same number of homes for sale. Because the number of homes available are down by a third, you will see a decline in the number of contracts, but they didn't go down as the number of listings did, even though rates are 2% higher than last year and almost double from 2 years ago. That persistent demand has caused prices to still go up in many parts of the market. The good news is rates appear to be flattening out and are more likely to come down as time goes on than go up. Let's dig into these numbers. We are seeing a pretty significant drop in pending home sales since the same period in 2022. If this keeps up, it could translate into 1.5 million less sales this year, which can make the consumer think the housing market is declining, but this is just one data point. Normally, when you see such a significant drop in new contracts, you would see a large rise in inventory, but that hasn't happened. We are still firmly in seller's market territory. If no other homes came on the market for sale, we would run out of homes in just over 1 month. The reason inventory hasn't gone up is because there is a 40% drop in new listings since the same period in 2022. This is a huge decline and it means the lack of inventory is holding back home sales. If there were more homes available, this would actually be one of the best years for real estate sales. People were thinking that as rates went up, prices would come down, but that hasn't happened. Prices are higher than 2022. In terms of interest rates, it's more likely that we're near the end of increasing rates than the continuation of them. The runaway inflation rate is what caused the Feds to increase them, but now that we are nearing the target inflation rate, it means we are less likely to continue raising rates than more. This is welcome news for buyers and sellers. When the rates eventually come down, this will give buyers more affordability with their home purchase. But lower rates also mean that sellers will be more likely to put their homes up for sale since it won't be as hard for them to give up their ultra low interest rates. If rates get into the 4s and 5s again, we will likely see the logjam break up and more homes coming on the market. This should help ease the competition and get us to a more normal and balanced real estate market, although we still will be in seller's market territory for the foreseeable future due to a decades-long lack of supply of homes being built. Even though rates are now higher than in recent memory, we are still below the long-term average. And when you look at the total amount of equity of homeowners, 70% of them have more than 50% of equity in their home. And of the homeowners with mortgages, over 90% have an interest rate below 6%, with almost 3/4 of them having a rate at 4% or lower. This combination of low fixed interest rates and lower loan balances is just part of the reason why you won't see a wave of foreclosures. If sellers get into financial issues, they have enough equity to sell their house and avoid a foreclosure. That's our halftime report. Before we take you to some tales from the tape, remember that we have you covered for the Baltimore and DC metro areas, and we are never too busy for your referrals. If someone needs our help outside of those areas, we know the best agents across the country to bring in, and we will be in the co-pilot seat so we can still be a resource to them and you. See you next time. Here's our tales from the tape. In most real estate market contractions, when you see a drop in demand like we have seen recently, you would usually see a rise in inventory levels. That hasn't happened though because of two reasons. The first is that supply is historically low. The last decade produced 5 million less housing units than the previous 40-year decade average. It's going to take about 18 years to make up that missing supply at today's current construction pace, possibly longer if builders have a lowered outlook on the real estate market. The second reason is many would-be sellers have a good amount of equity in the property, but also likely very low interest rates that we'll be hard-pressed to ever see again. On top of that, if they were to sell, they're going to have to buy in today's market with much less affordability, so they're continuing to stay out of the market. For perspective, the Great Recession had a huge amount of oversupply due to developers overbuilding, and sellers eventually flooding the market because their mortgages or circumstances changed and they couldn't afford to keep the property any longer. At the same time,
Easy to get loans dried up, causing demand to disappear. High supply, low demand means prices will go down. But we shouldn't expect any significant price declines because of an underlying natural growth in the demand. The millennials have come of home buying age, and unless we have a time machine, nothing will change that.
That's really interesting. What would you say to prospective sellers?
I would tell them to not cut corners with making your house stand out against competition. That means maximizing your showing condition and working with a professional that knows how to draw in the buyers. Buyers are willing to pay for a good home, and it's still possible to generate multiple offers while selling quickly if you're working with the right professional who also knows how to negotiate them.
That's some sage advice. So what advice would you be giving to prospective buyers?
For buyers, I would tell them to buy a good home that meets your needs, pay a fair price for it, and make sure that you have a payment you can carry until rates improve and you can refinance.
And what about the thought that buyers should wait for interest rates to drop before buying?
That's a great question, Tom. And I would ask, what do you think is going to happen to the market when the rates drop again?
It will become very competitive for buyers. It will turn more into a seller's market, and prices will go up?
Exactly. That being said, many borrowers are feeling like they missed the boat. And to them I say, the best time to plant a tree was 20 years ago, the second best time is today. At some point, the economy will hit a recessionary period, but now the Feds have a tool of reducing rates so that they can stimulate the economy again. That would then be your sign to refinance when the mortgage rates eventually drop. That means that by buying today, you will be able to avoid all the competition in the marketplace of the future since you only have to refinance to take advantage of the lower rates.
You always do a great job of giving us needed perspective and information so that we know what's happening in the market. Any parting words for our viewers?
It's my pleasure, Tom. My advice to the viewers is to make sure that you have a true real estate professional in your corner that knows their stuff, is trustworthy, and responsive. Especially with the market that we're in today, we are counting on you and your introductions to anyone else that could benefit from our level of expertise. So be sure to refer everyone and anyone that you know that is looking to do anything real estate related to your favorite real estate professional.
This has been our special 2023 real estate market forecast. We now return you to your regularly scheduled programming.